I think gold's. I think right now we're seeing the precious metal space has really come to life. Everybody's kind of on high alert for it. So naturally, we're going to see money move into the more speculative side of things, which is why I think we've seen silver move first. People have moved into it quicker. It's a smaller market. They want to make higher returns. So silver's already popped and broken out. Gold is a little bit more conservative. It still has a very strong chart pattern. This is a huge run up. It's at a big pause. It is pointing to about $5,200 per ounce when all this unfolds. And right now, if we zoom in on the shorter term chart, we've got a very strong bull flag pattern, just very similar to silver. It's had a nice run up. It's had a pullback, and it's just showing that in the short term, while silver shows about a 17% move, gold shows roughly about a 6 or so percent move. And that's typical. Silver percentage wise moves a lot more when it has a run. So I think gold is a little bit slower moving. I find it's more accurate. I find I can win more trades with gold. And see, there's always a trade-off, right? Either you can knock some out of the park, have some huge gains, but you might not win many trades because they're a little more unpredictable, like silver. Silver's got a beautiful chart. As you and I know, we're in a time where I think silver, precious metals across the board are set to continue to push higher and potentially go really ballistic and take off over the next couple of months. But when we look at the short-term chart of silver, we've had a lot of different stuff, different patterns on different time frames unfold. But we just had this great big pause. We had a big rally up to this level, which, depending on where you want to draw this level, either way, it's a beautiful big pause, a consolidation, meaning that this is just a little bit of a temporary pause before it goes higher. And now we've seen it break out. We've seen it run higher. And now it's forming another bull flag pattern right here. We've had an explosive move up over the past 2 weeks. It's been trading sideways. This looks like a high momentum move, meaning we could see silver, based on this chart pattern, run to about $68, $69 an ounce. It could happen literally within 2 or 3 trading sessions based on this chart pattern. So we could see silver and metals have a big pop this week. So it's pretty exciting when we look at the chart and using technicals. If we use Fibonacci extension, it gives us a good idea of just this short-term rally and this pullback that we've seen. It tells us where the next 2 upside targets are for silver. So $64 is the next upside target. Based on where price is right now, it's about a 10% move. And if we do have this 100% measured move, that's going to be around a 17, 18% move to the upside. So this could be a really nice explosive move in silver if it can get its momentum going over the next couple of trading sessions. And when we look at, I don't have it for silver, but silver and gold are pretty much the same. When we look at the seasonality chart, as you like to always pull up here, Craig, we're coming into that time of year, like pretty much right now, after the first week and a half or, of the year or of December, we tend to see precious metals want to go higher. And usually gold and silver move up together. And so we're coming into the sweet spot, not only for precious metals, but even for equities to have a final push higher. And so silver is really exciting because percentage wise, it's got a very big move, primed and ready. And as we can see from this last portion of this move, in more or less, it was 5 trading sessions. It kind of made, a very significant move percentage wise. If we look at that move, it was about 24%. So I think there's some excitement just around the corner to end the year on a very strong precious metal note.
Recent trading activity shows silver building the type of high-energy pattern that historically precedes sharp breakouts. Over the past 2 weeks, prices surged, stabilized, and began coiling again. Behavior seen in markets preparing for sudden continuation moves. Fibonacci projections now point toward short-term targets near $64 and extended objectives beyond $68 if momentum fully ignites. A measured move calculation indicates potential gains approaching 18% in just a few sessions. Such explosive setups are rare and typically appear only when institutional activity accelerates. With seasonal tailwinds approaching mid-December, the current environment is primed for volatility and exceptional upside potential.
Yeah, I mean, if we use Fibonacci retracement, we could say, well, based on that move, the sweet spot will be between about 52.50 up to about 55.40. So right around this breakout zone that you just mentioned, right where this pink reddish line is. So that would be a healthy pullback range. The chart pattern right now is actually primed and ready to pop and really take off. This is a very high momentum move. So if it does pull back, I think it's an opportunity. If you're not long it right now, I think I do think it's gonna move up here. So either
Well,
way, all the time frames for silver and precious metals are bullish on all time frames to the upside. So at
and
this point, it's in a very strong rally mode. You either you need to own it. I think gold's. I think right now we're seeing the precious metal space has really come to life. Everybody's kind of on high alert for it. So naturally, we're going to see money move into the more speculative side of things, which is why I think we've seen silver move first. People have moved into it quicker. It's a smaller market. They want to make higher returns. So silver's already popped and broken out. Gold is a little bit more conservative. It still has a very strong chart pattern. This is a huge run up. It's at a big pause. It is pointing to about $5,200 per ounce when all this unfolds. And right now, if we zoom in on the shorter term chart, we've got a very strong bull flag pattern, just very similar to silver. It's had a nice run up. It's had a pullback, and it's just showing that in the short term, while silver shows about a 17% move, gold shows roughly about a 6 or so percent move. And that's typical. Silver percentage wise moves a lot more when it has a run. So I think gold is a little bit slower moving. I find it's more accurate. I find I can win more trades with gold. And see, there's always a trade-off, right? Either you can knock some out of the park, have some huge gains, but you might not win many trades because they're a little more unpredictable, like silver.
Precious metals often enjoy a favorable seasonal phase as the year closes, with gold and silver historically rising after early December. Silver tends to outperform due to its smaller market and speculative appeal. Traders who track seasonality and sentiment observe that enthusiasm is building exactly on schedule. A recent 24% burst over 5 trading sessions underscores how quickly the metal moves when liquidity flows in. If a pullback occurs, the zone between 52.50 and 55.40s may act as a healthy reset area. With all major time frames aligned bullishly, silver remains one of the most dynamic assets heading into year-end.
Or you make lower returns, but you win more trades and it's less volatile. So there's two different characteristics between these opportunities. And gold's doing what it does. It's being a little more conservative. It's lagging a little bit at this point. I think money's looking for higher returns than gold, which is silver. And I think miners and platinum and palladium. I think there's money starting to figure out, trying to spread out, I think, in the precious metal space right now. I don't know if you and I have looked at these yet,
goodness.
but obviously we've got a pretty explosive bar. We've never seen a bar. I mean, it'd be interesting to go back here. If we look at these green bars, percentage wise, there was a 149% bar. We'll have to see what some of these other bars are. That was a 30%. So this bar that we have right now, I mean, if you think about it, it still has a lot of potential to be back similar to the late 70s, where we've seen bigger spikes than what we have right now. But when you look at it from this chart standpoint, it's a pretty big spike. Let's take a look at the log chart. If we kind of look at the log, it gives us a bit more of a balanced view. But I mean, we're just in this big rally mode in precious metals. There's no doubt the trend is up. I don't think anybody's really trying to pick a top in gold because that's just a bad opportunity or a bad play. You really just have to ride this trend up until it's proven wrong and until it reverses on multiple time frames, from potentially the 30-minute to the daily to the weekly or the monthly chart. And then you'll be like, okay, maybe the trend is done. So when we look at it from an annual standpoint, though, the gold has had a beautiful move. If we were to look at it from a Fibonacci standpoint, based on this rally up here, this pullback through here, we have blown past the 100% measured move based on this past yearly pattern.
While silver races ahead, gold is rising in a more controlled but equally impressive fashion. Long-term patterns project potential highs above $5,000 per ounce as the metal breaks beyond previous Fibonacci extension zones. Gold's reliability makes it a favorite for traders seeking consistency rather than dramatic percentage swings. Its current short-term structure mirrors silver's, another clear bull flag that could trigger a 6% move in the near term. On larger charts, gold has surpassed its measured move objectives, entering a phase often described as a runaway trend. In such conditions, the strategy becomes simple: stay with the momentum until proven otherwise.
If we go back even further, this is a much bigger one. Let's just clear the chart up. We can go based on this low back over here from 2000. We can go to the peak in 2011. the low back here, you can see here, we're still above all of the targets. And this is why I've been talking about it for a while, is we're in this kind of, I hate to say bubble phase or blow off phase, but we've hit the measured move targets for gold. And so now we're in no man's land. You just have to ride the trend. We're in the perfect environment for precious metals to go higher. And now you kind of drop down to these shorter term charts, which, if we go back to the daily chart, this is where we can get an idea of where the next critical targets are, because the yearly chart, we've already blown past all that. So we could grab the low from this last bull flag pattern, the high that we've had, and this recent low. And this will give us an idea of where this next run is going to go, which is about 51.75 for gold. If we to see what that is, it's about a 22% move. So there's a lot of potential still for gold to the upside over the next couple of months. We could potentially see money rotate into this space. I think one of the big things that'll be interesting to see play out is if the stock market eventually stalls out and rolls over. And if it does, is the money that's coming out of equities, is that going to pile into precious metals and send them sharply higher? I think it will. It's just a matter of waiting for the stock market to actually roll over and start to sell off, and for that new money to be raised to get put to work somewhere. And typically money, when there's cash on hand, people look to whatever's performing best to move into. And I think precious metals are definitely that space.
Looking at precious metals through a logarithmic lens reveals that gold remains in a structural uptrend spanning more than 2 decades. Massive yearly bars, reminiscent of late 1970s bull markets, suggest momentum remains intact. Some analysts warn of an approaching blow-off phase, while others argue the fundamentals, record global debt, geopolitical risk, and central bank gold buying support continued strength. Regardless, gold has exceeded long-term targets, entering a zone where price discovery takes over. By analyzing the most recent swing patterns, upside projections near $5,175 emerge, suggesting that the coming months may deliver one of the strongest advances of this cycle.
Never ending. It's just a constant phase of 20, percent rallies over and over again.
Isn't that remarkable?
Yeah. So, I mean, and the 5,200 comes out at anher 20% gain,
There
right?
you go.
That's how the market is. It stair steps its way up and then eventually takes the elevator down. But there's no doubt we're in a strong bullish chart power. And the question is, does this weekly chart go on for another 10 or 12 bars, which could be 2 or 3 months, or does it just pop and break out and pick up speed and hit that next upward target? We don't know, but the trend is up. So you just have to let it mature. It could take 3 weeks. It could take 3 months. It's not about so much timing the market. It's about knowing what trajectory and trend it's on, and then just taking advantage of it. Let the chart do the work. Don't try to rush anything, or else you'll get into a bunch of premature trades or get out of trades too early. Because the market, if it doesn't shake you out, it will wait you out. And that's what it did with this last one over here. I mean, it took forever for this bull flag pattern to play out. People started to give up on it, and then boom, it took off, and people are like, people are just too impatient.
Holding through a major trend is the challenge that separates successful traders from emotional ones. Precious metals often move in 20% stair-step rallies, followed by grinding consolidations that test patience. Many abandon positions just before the next surge. The key is allowing the chart, not the news cycle, to dictate decisions. Tops form only when breakdowns appear across multiple timeframes. Until then, trends must be respected. Whether the next surge lasts 3 weeks or 3 months, the path forward is defined by discipline. In this environment, silver, gold, and the broader metals complex may continue rewarding those who stay the course.
Well, you and I have been doing these reports for the last couple of years, and we just draw these targets each time, and we just keep hitting them time after time after time. It's not rocket science, but it is hard to do it because you get hooked into news and emotions, and you worry about giving back too much gain if it starts to pull back a bit, and then you worry about missing out on a move. It's the emotions and the news really take over. If you could pull that away from the market, get that out of your head, and just follow price patterns, which is what I do, which is what I try to help other people do. It really makes things a lot easier. But the problem is, no matter how much I try and keep people on the straight and narrow, just follow the price charts. This is what it's saying. This is what it's pointing to. they always have all this, they're inundated with news and other people's, opinions and extreme chart analysis that will scare the hell out of people and make them make decisions. So it's really tough. It's tough to put the blinders on and just be like, just let the next 20% move play out. And if it puts in a topping pattern and starts to break down, we'll be able to identify it and we get out. And you're never going to get out at the top. You're always going to have to give back a good chunk of some profits before you know a new downtrend, like the uptrend has ended and then a new downtrend has started. So if you can always realize that you're probably going to give back potentially 5, 10, 20% of a massive, big multi-year trend like this, that's just part of the game, but you have to let it prove that the trend is over before you get out.